Good afternoon, and welcome back to another presentation about another stock and another company. Today we are looking at Troilus Gold. It is a gold mining company which is traded on the Toronto Exchange under the ticker TLG and on the over-the-counter market under the ticker CHXMF. It is the 7th of November. And before we start this presentation, I do have to say that after making this presentation, I went out and bought shares in the open market of Troilus Gold. So the person who recommended me looking at this company in the comments, thank you for that. And having said that, if you do have a stock that you would like my opinion on or you would like to see a presentation on, leave it in the comments and I will take a quick look at it. And if I think it's interesting enough, I will do a whole presentation about it. And then you will get to know all the insights. So moving on, as always, we are going to look at the management of the company, the project that they have, the capital structure, the balance sheet, recent developments, and my opinion. So to start off with the management of this company, we have a pretty big management team in this company. It exists of 13 managerial positions, which is one of the larger ones that I've seen for mining companies. But I have to say that this mining stock, Troilus Gold, is in a different stage than most of the exploration companies that you will see online. So the fact that they do have a lot of management positions makes sense. But we're going to talk about three people today. We're going to talk about the CEO, the VP of projects, and the CFO. The CEO, Justin Reed, has 20 years of experience in the mineral resource space, and the experience is successful and wide-ranging. He is a ex-senior mining analyst at Sprott Securities, which is the money management company from Eric Sprott, the billionaire mining investor. So that alone tells you that this man has very deep and specific knowledge about the mining industry, managing money and managing the projects for Eric Sprott. He is also an ex-manager at Paladin Energy, which is a $3.5 billion company, an ex-GM, an ex-general manager, and he is an ex-director of global mining sales at the National Bank. So this man has been in the industry for 20 years. He's been analyzing stocks, he's been managing energy fields, and he has been involved in selling mining companies. So that is a lot of experience. He's also the ex-president of Stellidan Gold, which was bought by Rio Alto, which is a $1.2 billion company. So this man has a lot of financial and analytic experience in the field, and where his experience ends, the experience of Dennis Rivert begins, because this man has 40 years of experience in engineering, and especially in engineering in mining and industrial development. And I do have to say that reading his biography was one of the more interesting biographies I've seen, because he is actually stated with some real construction and real engineering milestones. He's an ex-executive of Freeport McMoran, which is a $55 billion mining company. He's an ex-executive of Ausenco, which is a $75 million mining company, and he is an ex-executive of SNC La Calin. I don't know this company at all, but it is worth 15 billion in the open market. Besides the executive roles that this man has seated, he also oversaw the construction of a almost 70-kilometer railway. And I do have to say that in an engineering space, that is a cool thing to have overseen. He is also credited with managing multiple multi-billion-dollar projects. So this man, Dennis Rivers, has the real engineering background. Justin Reed has the real financial and analytical background. And Suzanne Milne, the CFO, I do have to say that there is a little bit lacking in the experience or in the biography there, but she has 20 years of experience. She has significant roles at mining companies, QMX Gold, which was bought by Eldorado Gold, and she joined the company in 2017. There isn't much more I could find about her, but these two men, definitely a lot of very interesting experience there. That experience continues in the board of directors. We have the chairperson, Chantal Lavoie. She's a professional mining engineer as well, with 35 years of experience. And she's the ex-manager of underground mining at Barrick's Gold Strike project. So, a lot of mining experience, 35 years, in one of the biggest mining stocks or one of the biggest mining companies in the world, specifically in underground mining. That is a very engineering heavy field to work in. You really got to understand a lot about the geology, about tight spaces, about air movements, about water management, about costs, about safety. And to see that she has a lot of experience in that is very comforting. She has served as the CEO of Crocodile Gold. I couldn't find much information about that. She has been the Chief Operating Officer of Dominion Diamond and the Chief Operating Officer of Iron Ore Corporation. So not only is she stated to have mining experience, engineering experience in an underground mine, in a gold mine, in a diamond mine, and in an iron ore mine. That's a broad range of experience. I like seeing that. Francois Baron is a professional mining engineer as well with 40 years of experience, and he has served as a general manager of Troilus Mines in 2005 till 2010. So that means that this man has been the manager of this current project when it was owned by a different company from the time 2005 till 2010. We will get into what happened afterwards with the company in just a little bit. And Francois is also the ex-president of the National Mining Institute of Quebec, which tells me that this man has a lot of very interesting connections in the world of politics and in the world of mining, which in today's climate, with the permits being extremely hard to obtain, is definitely a big plus. The other two directors, honestly, I don't really see the connection with mining and the mining space at all. Diane Lai is a marketing expert, started a lot of different companies, very successful woman, 20 years of experience, but it doesn't seem like she has a lot of mining experience. I think that she is on the team for marketing related activities. And Brigitte Bernesch has 15 years of experience with mining companies, specializing in corporate tax. So this is probably a help to the CFO to get some tax works done on the project. We can also see that Justin Reed is also on the board of directors. CEO being on the board of directors always means that whenever the CEO decides that he comes up with a plan to increase the pay of all the managers, he gets to vote on that plan as well. So that's why I always dislike seeing the CEO on the board of directors. So if we look at this management team and if we look at this team of directors, we can definitely say one thing for sure. There is a lot of mining engineering experience in this company. That flows through the entire rest of the presentation that I'm gonna do, because this is a extremely dense feasibility study project. We are gonna look at the project right now. The Troilus project It was formerly an actual mine. So if you go to Google Maps and you spend a little bit of time figuring out where this project is, you can see that a top-down view, this is the project right now. So in a previous video, I talked about the differences between greenfield and brownfield exploration. You can definitely see just visually that this is a brown field. The field looks brown because it has been worked, because this mine has been in operation from 1969 till 2010. More specifically until 2009, and then they had to do a little bit of rollout work and a little bit of infilling until 2010 when they ceased production. Because this project has been in production before, there is a lot of infrastructure that has been built by the last company that is still there. Of course, because if you shut down a project, you're not going to take everything with you. There are certain things that you will leave in place because it's simply more cost effective to leave them. On the project, there are still roads, there are still power lines, there are still power stations, and there is an operating water treatment plan right now at the project. The project values this infrastructure at about 500 million. I would take that with a grain of salt. That does seem a little bit much, but you know, it definitely has some value, the fact that everything is still there. One thing that is not there, however, is the mill. When the project closed its doors in 2010, they dismantled the mill and they sold that to another company in Mexico and they shipped it off, so the mill is no longer present. However, they do have a big resource. Since the current company has bought this project, they have increased the mineral resources in the project by about 400%, and right now they have a mineral estimate of about 10 million ounces of gold at half a gram per ton, about 835 million pounds of copper at 0.05%. That is very low grade copper. And they have 21 million ounces of silver at 1 gram per ton. That is also both not a big deposit and extremely low grade. So the biggest part of this deposit is definitely going to be the 10 million ounces of gold at half a gram per ton. This project is currently in the feasibility stage, or well, it has passed the feasibility stage. So that means that this is definitely becoming an engineering job. That means that they do have a mineral resource estimate. They do have mineral reserves. They do have an economic study out. They do have a pre-feasibility study out, and now they have a feasibility study out with a lot of interesting facts in there. So where the previous people that owned this mine left the mine and where they closed it off, these people want to continue mining it. But because the grade is low at this moment, they would like to start mining higher grade material, which gives them the unfortunate situation that they do have a big strip ratio. So that means that in this project there's a lot of waste material that that needs to be moved away in order to get to the pay grade, which means that can negatively impact the economics of this mine. The projections are for a 22-year mine life at about 300,000 ounces of gold equivalent a year, which the company calculates will be profitable at $1,500 gold. Of course, gold is about 4,000 right now, so just imagine how profitable this project will be if it were in production today. You know, it will be spitting out cash like it's water. Good thing to know about this project is that some parts of the land are subject to a 50-50 joint venture. However, we are going to look in detail about what parts of the project that is and whether that has impact on the deposit. So with that overview out of the way, let's look into it in more detail. If we look right here, we can see that the project is, first of all, located in Quebec, Canada. It is located right here. All of these lines that you see are roads. So since this was a previous mine, there is already road access towards the mine, which is connected all the way through Canada to the seas. You know, everywhere you want to go, there's a road, and that's perfect. It's also in the middle of nowhere, so there is no problem building next to houses. There's no problem with residential areas or anything like that. If we zoom in a little more on the project, we can see that these are their mineral reserve claims. You can see the black line going around the project like that, all the way up, and then they have a separate part right there. You can see in this image what parts of the project are truly Troilus Gold's project and which parts are part of a joint venture. There's a lot of different colors in this picture, and that is because all of these mineral claims have different royalties on them, and all of these mineral claims are bought from previous companies. The dark gray parts are from a transaction with First Quantum Mining, that is another big mining company. These are their own leases, and the turquoise green parts are parts that are joint ventured with another company. If we overlay these two images, I have done that in the next image right here, you can see that most of the project and most of the deposit is located right here. The company has some exploration targets right there, and they are exploring right there. However, the deposit right now is located in the zone where the company has 100% control and does 100% of the profits. So that is, for an investor in the company, extremely good because you don't need to share 50-50 with another company. However, if they do find another target in another zone, there is a big chance that the company has to share that with the joint venture. However, the cost will then also be shared, so there's a give and take in that. In this image, you can see where the deposit is laid, and that is, if we go back one image, that is in this zone right there. So this is where the deposit is right now. In the next image, we are going to zoom into it a little closer, and you can see a very distinct difference between most of the deposits that we've seen and this one, and that is that this has very separate zones in them. There are 4 different zones. 3 of them have been previously mined. That is the X22, the J zone, and the Z87 zone. Don't ask me how these names came to be because they're very strange. I don't understand where the names came from. And they got a new zone. It's called the Southwest SW zone. That is the only zone that I do understand because it is in the Southwest. And if we look at this image right here, we can see all the zones and how they have been mined. So if we start at the top left, you can see it is the X22 zone. So we're going to go back one image. The X22 zone, that is this zone right here. You can see the surface. It's going down, and this has been mined from the surface on. The company does expect there to be more mineral resources right here and an estimated resource right there. The yellow is indicated resources, the blue is inferred. If we go to the top right, you can see that this is the J zone. If we go back one image, the J zone is right there. You can see the surface right here. It dips, it comes back up, and it goes through. This has also been mined from the top. So this little pyramid that is missing in the resource has been mined already. And the company is projecting a new mining pit that goes all the way down and captures this entire resource that the previous operators of the mine have left. By far the biggest resource that this company has is in the Z78 zone. So we go back one image. This is the biggest, the Z78. And you can see that there's a new color, it's red, and that is high grade. You can see the surface here, that green line, it dips, it comes back up. Another pyramid is missing. That means that the previous company has already mined that, but this company is envisioning a much larger pit that goes and captures the remaining resource. You can see in the last image, the southwest zone, the SW zone, that there is no I'm very sorry, that there is no pyramid missing in this image. That means that this zone has not yet been drilled, or sorry, not yet been mined before. And that is very important for the rest of this presentation. So you do need to understand, and I'm going to show you this in an image just right now, that this zone has been mined and this zone has not been mined. There is a 1.5 kilometer gap between these zones, and that is an extremely important detail in the rest of the development of this mine. Because if we go one image further, you can see that we just looked at the deposit, and the deposit is very interesting. But the most interesting part about this whole project is the fact that it is in such a late stage of the development of this project that the entire project has been engineered till the last day of the mine. That is why all the management positions are filled with people with extreme engineering backgrounds, because, you know, this has been in the works for a while. So the company is planning to create a new mill, to make a new mill with more than 5,000 tons per day processing capabilities. That means that they will need a permit from the federal state of Canada. And that permit takes about 5 years to obtain. They have started the processing to get that permit about in 2022. So the earliest a building decision can be made is in 2027 if everything goes well. And their plan is to start mining and then keep mining this whole project out. A very interesting and very important part of this whole project is that the company currently still has a valid mining lease for the 87 pit and the J pit. So if we go back one image, you can see that this zone has been permitted and still has a valid permit on it. This zone doesn't. So the company right now is planning to first start mining this zone, and then while they are mining it, during that process, they will slowly start working on obtaining the permitting for the southwest, the SW zone. However, I'm sorry, I need to go back one more image. If it happens that these two zones are connected, so that the gap zone shows mineralization, then the valid permit for this part of the project is no longer valid. So that means that the entire project needs a new permit, a new mining permit, and that can delay the building of the project by a couple of years. Who knows how long the processing, the permitting of that takes. So the best outcome in this scenario, you know, if you want speed in this project over size, is that the gap zone doesn't show any mineralization, so that this mining permit will still hold and they can get this one during the mining of the other. Yes, we will talk about the capex in the next image. But yeah, the company has a lot of plans. They have planned it out very structurally, and I like seeing that. A lot of thought, a lot of time, a lot of effort, and a lot of money has been spent engineering this entire mining project. They want to start small, build it bigger, and while they are building it in year or in phase 3, they will probably start mining in the SW zone as well, given the fact that so much time has passed at that point that they will probably have the permit. But again, if the zone does show mineralization, all the plans will be put on hold until they get a new permit. So there's one more sentence in this graph or in this slide, and that is the capex for this project. The project is expected to need about $1 billion just to start the mining process, and that is because it is such a low grade project. It needs a lot of processing to get the gold out of the ore, and in this image you can see that. I am not gonna sit here and try to act like I understand what is happening in this image, because I don't. This is a very complex structure that they've built, and one big risk to this project is something in this entire process breaking, holding the project up, of course, because it's very complex. It's not a heap leach project which is simple. This is a very complex project, but the complexity is what drives these engineers to really build something interesting, because they have put so much time into this that they have given all the investors in the feasibility study the opportunity to look at their blueprints of what they want to build. So even though the processing of this ore that they are planning to mine is going to be complex, I do believe that the management has the knowledge and the experience to execute on the job, and that is of course a big green flag for me. If there was any less expertise in engineering on this management board, I would probably not have taken this chance to get involved in this company at all. So we have talked about the deposit, about the engineering, and about the complexities of it. Now let's look at the potential value that this deposit will hold. As I said, the company has about 11 million ounces of gold, 21 million ounces of silver, and about 45 million ounces of copper. If we put that in at today's prices, we can see that the company has an estimated buyout value of $7.2 billion. Usually, I look at a buyout value for companies, but given the fact that this company is clearly demonstrating that they do want to build this mine themselves and start mining the ore in a pretty timely manner, the value of this project will probably be bigger than 15% of the deposit value. However, since that is how I value all my projects, I will value this one the same way. If we look at the share structure of this company, we can see that the company has about 385 million shares outstanding with 61 million warrants for a fully diluted market cap of fully diluted share structure of 445 million shares at about 90 cents a share, gives it a market value of just shy of $400 million. So you can see the project, in my eyes, is worth about $7 billion. You can buy it for $400 million right now in the open market with a feasibility study in place. That is a steal, in my opinion. So the top investors in this company are Equinox Partners, which is a venture from Equinox Mining, a very big mining firm. Van Eck Capital Management is in this company as well, and the management owns about 8% of the company. 8% of a $400 million company, that's quite a lot of money. That's about 30 million. And I do like that the management team has such a financial interest in this project working out as well. That is a good sign. This stock is primarily focused on on institutional investors. As you can see, retail investors only hold about 28% of the company, and I also like to see that. That means that the company is serious about long-term investors that want to put up the money to build this project out. However, if we look at the balance sheet, there are a couple things that caught my eye in this balance sheet. The company states that ending on the 3 months in the 31st of June, they had 25 million in cash and about $32 million in liabilities. Having liabilities and debt as an exploration company is never a good sign, but given the fact that this company is this late in the stage and is looking to make a real decision on whether or not they are going to build this mine, it does fit that there will be some debt involved, although I don't like the sign of that because the interest will be paid by the shareholders, which is now me, and I don't like paying interest on loans. They are spending a lot of money on generating G&A activities. They've spent about $39 million, about 9 million of which is in salaries, but 20 million of which is in professional fees. But I do have to say that 14 million of that is spent on the feasibility study itself. And looking through the feasibility study and seeing how well engineered it is, I do understand that a lot of money went into it, although $14 million is a lot of money to have paid. They also spent about $4 million in share-based payments, and they spent about $5.2 million on offices. That is the office that their headquarters is in, and $4 million on an inactive mining camp that they are renting out right now. The company has also spent $1.3 million in traveling costs, which I would like to know where the management has been that cost 1.3 million. Because, I think you could fly a couple times around the world for that amount of money. I don't really understand how you spend more than $1 million in 3 months on traveling, except if you travel in very expensive private jets and are renting extremely expensive cars in different countries. So if there would be a little bit of explanation about that, that would be great. The company has also spent about $6.1 million actually drilling the project and generating a bigger resource. The G&A to exploration ratio is extremely high at 86%, but given the fact that a lot of the money actually went into the feasibility study and that also advances the project, that is also a part of the it's also part of the project, so I don't know. It might be fitting at this stage, but I do hope that in the next couple quarters, these study costs will go down, and if they don't, then the company will have to be able to really explain what else needs to be engineered before they start really making an effort to starting to build this thing. The company has produced a net loss of 45 million, just about. And to cover that loss, they have sold 27.8 million shares for a dilution rate of 7%, which means that if you hold this stock for an entire year, you can be expected to be diluted for 28%. And if we look at the projected value of this company, of this deposit, so let's say that the company does not get the permit and the company does not continue with the engineering of this project. That means that the project is valued, in my eyes, at $7.2 billion. They have about 400 million shares outstanding for about 90 cents a share at a dilution rate of 28%. That means that the current multiple you can expect when somebody buys this project for this amount to be 20 times, and that drops down to about 3.7 times your money in 8 years. So there is a definite loss for holding a stock like this, of course, just like any exploration stock, but there is a big upside as well if they decide to actually build this mine and the mine is profitable. Then you are gonna make a lot of money on this stock. In recent news, meaning the news after the latest press release, the company announced that they have made a public offering of 150 million. They have also surpassed 85% of the engineering of this project, which means that the high study costs in the latest financial statements are projected to go down, which I like because I'm stepping into the stock right now, which means that I get all the study costs for free, and I get the previous infrastructure that the previous company left on this project also for free. The company has also signed a agreement for the sale of their concentrate, their gold copper concentrate, and they signed 2 agreements to do that. They have also raised $700 million in financing. So the company right now has done the engineering, they have raised the money, they have found a buyer for their project, and currently they are just waiting on the permit to move forward and to start building this thing. So, in my opinion, they have a very detailed feasibility study with a good plan. The management is in line with the state and the stage of the project. They have the experience to move this thing forwards. They are spending a lot of money on the project and on the feasibility studies, but that is expected seeing where the project is. There is a possibility that this project will get permitted within a couple of years. However, there is also a possibility that the permitting will take a lot longer if they found out that the zone between the 2 deposits is mineralized. So that is definitely a big risk. The capex is high. It's $1 billion capex for a low-grade project, but the amount of ounces that they have does make up for it. They are looking at a very expensive processing plant. It's going to cost about $400 million with a lot of opponents in them. So the chance that during the actual operations of this project, something will go wrong, and that they need to fix that, and that is going to cost money, that is to be expected with something as big as this. However, the capex that they need, they seem to have raised the money to start building this. They have letters of interest for $1.3 billion in financing, and they have $700 million in a line of credit that is mandated to them. So combining that, they have more than enough cash available to start this project. Another thing that was interesting with this project is the high strip ratio, which means that right now the gold prices are high and the oil prices are low, which means that a high strip ratio is not that important. But if we ever get into a world where the gold price drops and the oil prices rise, that means that moving all that material is going to cost a lot more money, and the gold itself is going to be worth less, meaning that the economics might get negatively impacted, and the project might pan out to a different value when those prices change. However, given those plus and those minus points, given the risks in this project with the permitting and with the zone in between the 2 deposits, I do still judge that this company at the current market cap is definitely a buy for me, and that's why I took a position in this stock. that is about it for me today. I do want to thank you for listening. I want to thank my viewer for suggesting this stock, because this was definitely a very interesting deep dive. If you do have something that you want me to look at, leave it in the comments. Like the video, share it with people that you think are interested in this, and subscribe to the channel. All right, that is it for me. I'll see you in the next video. Bye bye.